So there's different reasons, but because of the pandemic and because of this interesting time, either way the election swings, I still believe they're going to create massive opportunity, but for different reasons.
So the question is this: how do most agents who don't have access to the secrets the top agents in our industry hoard themselves grow and prosper in today's real estate market? That's the question, and this podcast will give you the answer. Hi, I'm Ari Rastegar, and welcome to Real Estate Rockstars. Hi, Real Estate Rockstars. This is Ari Rastegar, and I am so excited to share with you our newest head podcast sponsor. And this is a company called RentRedi. RentRedi is a landlord-tenant software that has everything you need to manage your rentals from your phone or your computer. No need to be tech savvy, download multiple programs, or hire a specialist. RentRedi is easy to use for everyone. And if you do have a question, their customer support team is available to make sure managing your properties doesn't have to be harder than it already is. RentRedi has a feature for every step of the landlord process. You can list your vacancy for free to Realtor.com and doorsteps, find quality tenants with a full tenant screening process, send and e-sign leases right from the app, and track maintenance requests. Yes, there really is one app for all of that. Best of all, not only is RentRedi easy to use with awesome customer service, but it's affordable as well. Get a subscription of RentRedi for as little as $1 a year when you sign up for their annual plan using code ROCKSTAR. Right? Now that's crazy. $1 a year. Why wouldn't you go sign up just to see, even if you've got one tenant or want to try it with one of them? So that's right. You get a whole year of RentRedi for just $1 when you sign up at rentredi.com. It's spelled RENTREDI.com using code ROCKSTAR. Real Estate Rockstars, this is Ari Rastegar, and hey, I am back. The last couple of weeks, you guys have heard from some of our old Real Estate Rockstar kind of classic episodes. You've had Paul Morris on here being a guest host. I have been traveling over the last 6 weeks, and now I am back, and we are getting live. And as we get going with this one is recording just a couple days before it's getting released. So I'm really excited about who I get to talk to today and the different things we're going to be talking about. This is going to be kind of a hybrid between what to do in real estate, a state of the market, and also maybe kind of an election policy update type stuff. So I am Ari Rastegar with Real Estate Rockstars. Today, I get to interview Ari Rastegar, founder and CEO of Rastegar Properties in Austin, Texas. Ari is doing so many things within his business, commercial, residential, developments, things like that. And we're going to talk about a whole bunch of fun stuff today. Ari, thanks for joining me.
Hey, thanks for having me. We love the show. We're happy to be here.
Awesome. So why don't you give everybody just a quick little update of what Rastegar Properties is? What are the projects that you're working on, just so we get some depth for, the info you're going to be giving us?
Yeah, sure. So, we've been in 38 cities, 12 states, 7 different asset classes. Our investors are public pension funds, family offices, insurance companies, high net worth individuals. We've been really asset class agnostic, for most of the firm's history. I own 100% of the company. I, literally delivered pizzas through college, and used my student loan money in law school to kind of start the firm. And it's very much a family business. My wife works in the company. My sister-in-law is our chief operating officer. The core of our business now, although we've been in the other asset classes, is here based in Austin, Texas. We have a high-rise site on McKinney Avenue in Dallas, a high-rise site in Phoenix. But our focus is really in the Sun Belt. That's really kind of, where our expertise lies and where we see really the future. Our core competency is vintage multifamily, just buying 30-year-old, 40-year-old vintage products outside the urban core. One of the projects I'm most excited about that's new to us, so we have some great partners that are helping us execute, is a 200-acre parcel in Kyle, Texas, which is about 15 miles south of Austin on the I-35 corridor, if anybody's familiar with that, where we're building, 660 houses in this first kind of phase, 300 multi-units, in response to, what's really going on with COVID, right? And so, as we talk about this thing and, agents are looking and seeing, home prices, surging outside of the urban core, because COVID is kind of force people out the urban core for really proximity issues. And so you're seeing housing prices really, really surge more than they have in many years before, because people don't feel as comfortable in the urban core. I don't think that's permanent. But, being in all these different asset classes and, building industrial, we have a 50-acre site next to very close to where Tesla is in Austin. We're seeing a lot of these trends that had already started because of COVID, whether it's the exodus out of California, into Texas, the exodus from New York into, kind of the Florida areas. But COVID has thrown an accelerant, on a lot of these trends that were already happening. And I think there's just such a tremendous opportunity right now for anybody that's in this business, that'll do the work, right? Edison, had a funny quote that people miss opportunity because opportunity shows up in overalls. And, this is one of those moments where, if you're willing to do the work and kind of slug through mud, there's just such a tremendous opportunity to be able to, create a lot of value, make good money, whether it's for your investors or whether it's to, serve your clients on the investment sales side. But it's really, people talk enough about the doom and gloom. Like, I actually think this is a pretty unbelievable generational opportunity. But that's kind of the long and short of it.
And I like the throwing accelerant on the trends, right? Like, because we've seen it in real estate. We've seen people making choices faster that were coming. The exodus from California, there were a lot of people that, because of different laws that were coming, were like, oh, eventually we need to start thinking about this. And then it's speeding up. People in the cities thinking, hey, I would like some more stuff. And now this is speeding up. And then technology wise, we've heard so many people say that we've excelled, 10 years in 6 months. Airbnb, they just, they interviewed the CEO recently. He said, I didn't realize I was going to have to make, 20 years of decisions in like 6 weeks. Right. They thought they were going under, they thought they were out of business, and now they're going to go public. It's like seeing the different trends that people have seen, and and similar for us. I've shared the story. I've got a big house in California that when this was all starting, everybody canceled all the Airbnb bookings. We were thinking, oh no, that asset is gone. And then as soon as like summer started to hit, we had people, instead of people coming for big parties and company retreats and things like that, we had people from San Francisco just wanting to go up, drive 2 hours out of San Francisco instead. So as we talk about that Exodus stuff, it's really interesting to see. Rockstar Nation, this is Aaron Amuchastegui. Hey, I hate to interrupt the current podcast that you're listening to, but I am so excited to share this with you. I just finished interviewing the original host of this podcast, my good friend, Pat Hyben. I got to talk to Pat about how he started his real estate career and a whole bunch of tips and tactics that he used to be successful. So if you haven't listened to it yet, go check out State of the Market number 49. On there, I get to talk to Pat about all those different things. And in there too, he talked a lot about his 6 Steps for 7 Figures book and training program that he built over the last couple of years. And I realized I haven't done a good enough job of reminding all of you lately about all of the resources that we've built for you out there. So if you want to check out Pat's course, we've got like a 3-minute summary video when you go to it. It includes so many easy to follow tips that you can follow on it like a day-to-day basis. You get email reminders, all sorts of different things that come with that course. You find that, you go to rebusuniversity.com, REBUS, rebusuniversity.com. Look at courses. You can find the 6 Steps for 7 Figures book. And really, there's a whole bunch of other courses in there too. Our normal prices used to be $1,500 or $2,000 a course. These are real deal professional courses. But now during quarantine, a lot of them are priced down to like $90, $95. So we've slashed the prices because we know right now is a time for everybody to be focusing on growth and education, especially while they're feeling like they don't have as much to do. And if you go in there and you figure like there's a lot of different courses you want, maybe you don't want to buy the a la carte. You can go to futureofrealestatetraining.com and you can get access to all of our different courses for $97 a month. I think there's a discount on there if you go a year, or there's even like a lifetime option that you can pay. You get access to every course we ever put on Rebus University for as long as we have it. So go check out those options, Rebus University or futureofrealestatetraining.com. All right, back to your podcast. Sorry for the interruption. Back into your story just a little bit. So what was your first asset class you got into? So now you're in 7, but so the entry level stuff.
I was in 7. We actually did a bunch of retail, but I mean, we kind of touched it all. We actually sold a bunch of those assets. And we did a lot of self-storage. We did student housing. We did some industrial redevelopment. Office, we were very kind of opportunistic in our strategies, and we exited them. We actually did really well in discount retail that had, the Targets, the Rosses, TJ Maxx. Many years ago, we sold those assets out back in 2016. as Amazon started to kind of take over the world. But I still find it a little bit ironic that Amazon's largest acquisition to date is Whole Foods for $13.2 billion, which is a brick and mortar location. So I still find that to be a little bit funny, being that they're the, e-commerce juggernaut. But, kind of dovetailing to your question, my first entree into real estate was building a little single family home basically on Canyon Lake while I was in law school. Okay. So it was a $80,000 interim construction loan. And I partnered with the local developer, used my scholarship money to buy the lot, borrowed a little bit of money from a friend of mine's father, and got to work. And I was on the build site in the morning, building, pouring concrete, and driving 20, 30 miles to make it to law school classes. I wasn't a very good law student, but I did graduate, take the bar, and otherwise my father would have killed me. But that was kind of how I started. And we built houses. We did well. And then 2008 happened. And I was lucky to keep my hat and keep good credit and move on to the next thing, and went to Wall Street and spent some time on Wall Street before coming back down to Austin.
Yeah, that was the other big opportunity, right? Like 2008, 2009 became so many crazy stories out of there. That was when we bought our first house on the courthouse steps in 2009. And we were just trying to find all these different options, right? And it was blood in the streets. My wife was working nights as a waitress at the casino, and I was struggling. We were a failed home builder. We bought that first courthouse step. Fast forward over the next couple of years, we bought 1,000 courthouse step things, and so that was like the big opportunity, right? And so when
this is different though, right? But right now it's different. It's a little different than that though, right?
Oh, it's a totally different market, right? But the mindset of going, hey, the world is crushing, collapsing, like finding the opportunity in what's out there, right? Like you're seeing there's so many opportunities now. And as you said, I don't think the opportunity is necessarily going to be, well, maybe you're going to tell me different in the downtown core and things like that. But so you mentioned retail really quick.
Sure.
Right now, that's what we're seeing so many foreclosures in Texas. And it's really like the only foreclosures we're seeing go through in Texas because of the moratorium is commercial and retail. We're seeing a lot of strip malls and things like that. What do you think is going to happen? Is there an opportunity there? Is it a sit and wait for a while? What's your forecast on retail?
So from an Austin standpoint, so I have to bifurcate this response. I really believed in this a K-shaped recovery and I guess that's a fancy way, a jargoning way of saying some asset classes are going to recover quicker than others, right? Like you look at hospitality as an example, people are going to go back to hotels, people are going to travel again. We're going to have a vaccine. We'll get there. Retail needs to be reinvented. And what happened when we call it the retail apocalypse, right, it was really an overcorrection. And if you look at millennials, right, I'm actually the oldest millennial, which is kind of I'm literally the cutoff. Okay. The core values are different. Okay. There is a desire for experience, to be out of the house, to be doing things. Right. And so as a father, a father of three, my wife and I are really sad that Toys R Us doesn't exist. Not because we can't buy toys online, but because it's something we did as a family. Right? You go to Toys R Us, you walk the aisles, and it's this fun thing you can kind of do. And people are starting to realize that as the retail has gone and closed in all those areas, which it absolutely has, people are really missing it. And there are certain bars or restaurants, and as those things closing, we're realizing that there's actually a pent-up demand for the right type of real estate. I'll give you the right type of retail. So I'll give you a funny example. Louis Vuitton, just spent, I want to say $20 million to exit their location on Madison Avenue. Okay. So LVMH said, okay, we're going to go, and Givenchy said, we're going to pay, the landlord. It's owned by a very, very wealthy man, in New York. His name's Jeff Sutton. He's brilliant. A huge breakup fee to leave Madison Avenue. That's a systemic shift. But what was interesting is up until the pandemic, only 10% of Louis Vuitton's product was sold online. Now, 100% of it is sold online. Okay.
Yeah.
So you're having a shift in luxury goods. We thought all luxury goods should be done online. So it's shifting more, and they're seeing the sales happen. But we're kind of missing this experience on the other side of it. So I believe that there's going to be a reinvention of what retail is. There was probably too much, some like survival of the fittest. Some things are just going to have to go that aren't just thriving business. And that's capitalism and that's survival of the fittest. And I'm a big believer in, I'm kind of, people ask me if I'm a Republican or a Democrat. And, I kind of just say I'm an American, like I see, I
don't want to say what you are right now anyway. People are so...
It's not even that. We'll talk a little bit about that, about the implications of the election, because I know a lot of people are thinking about that and, kind of what that means. But I actually believe that retail is going to make a pretty interesting resurgence, but it's going to be different. Like, for example, some of the big shopping malls, that we grew up going to, that's not coming back. Okay. Not in that way. So those sites, though, are prime real estate. So you can bulldoze them, rezone them, build multifamily potentially, have some sort of mixed use component, office, right? Some of the big boxes that are in these, like Sears is a great example. So Sears, let's say the Sears goes bankrupt in a big shopping center. You can convert that into self-storage.
Yeah.
Okay. And so it's going to change, but it's not going to go away. Okay. People want to go to restaurants. They want to go to bars. They want to go to live music thing. They want to be, so we're tribal beings, and this is the whole thing into the work from home. Coca-Cola started this work from home thing 10 years ago when the new CEO took over. He let a lot of people in certain sectors work from home. Okay. So longer term, people are like, oh, people are going to work from home. I don't think that's true. I think that the power of human interaction, the power of connection, of being together, whiteboarding, talking, it creates something greater than the sum of its parts, breaking bread together, going to lunch and having these interactions. But there's certain sectors that if you're a coder and you're not having any interaction with clients per se, and you're not in the sales or marketing or those departments, sure, there's going to be certain sectors that'll have more work from home, but office will begin to come back in a very meaningful way. We also have more entrepreneurs and more startups right now than we ever had in the history of the United States, which I love to see. And that shows the innovation that's happening. So during this type of pandemic, we saw it during World War II. Out of necessity, we innovated. And that's what's going to happen to retail. It's going to innovate. It's going to iterate. It's going to change into something different. There might not be 20 bars, but there's going to be 6 or 7 awesome bars, or there might not be 20 clothing stores, but trust me, Lululemon is still going to have their spot there, right? And so it's going to be about finding out where is the experience. So if you can create an experience with retail, whether that's restaurants or that's shopping, that is what I believe will be the future of retail. It is some kind of activity that is incorporated into, what that actually is. But there's certain markets that's going to thrive more in, right? And so if you look at, business friendly states like Texas, like Florida, okay, like Arizona, cities that are business friendly, that have a younger culture, like a Nashville that has a great music scene, you're going to see retail and things like that begin to recover much quicker and be vibrant in those types of environments. Okay. But where retail pricing is extremely expensive in San Francisco and New York, I was joking the other day on Yahoo Finance that, New York and California are the land of the flea and Texas is the land of the free. Okay. Yeah. So in areas that you have the ability to do that, I believe that it's going to recover and it's actually going to be much more interesting, much more innovative. And I'm excited to see what that iteration is going to look like.
I love the point of the people are missing some of that experience and maybe they don't even realize it, right? But
they feel something's missing, right? It's kind of like I'm at home or I'm at like what, like, and it's kind of the thing. The other side of it is, which I thought was wildly ironic, is that the CEO of Zoom said he's sick of Zoom meetings.
Yeah.
Okay. Right. I think we kind of all are, but genius. I mean, it's done a great thing. I'm not entirely sure why Skype didn't fill that void. That's another discussion. It's almost like Skype became MySpace, and a lot of the listeners might be too young to, remember, MySpace per se, but I'm not entirely sure why Skype didn't take over. That might be a different podcast, but these are all going to recover. All of these things are going to recover. We have population growth, but it's about the macro play of what cities. So if I'm an agent right now, as an example, I'm looking at Phoenix, Arizona, the sprawled metroplex. I'm looking at Dallas, Texas. I'm certainly in Austin. I'm in Raleigh, Durham. I'm in Charlotte. I'm in Orlando. I'm in Tampa. I'm in cities that have strong technology hubs. I'm looking at the suburban core. Okay. And watching the suburban areas thriving. Okay. I'm looking more at single family home investment than I ever would be. And talking to people leaving California, buying in Texas, selling their house for a couple $1,000,000, as you mentioned, and buying the same equivalent size location for $500,000, right?
Yeah.
And watching that population migration trend. Okay. And if we look at the election, if you look at, there's a lot of reasons that I'm still, we've been in the longest bull market in history. We all know that. Okay.
Yeah.
If Biden wins from a real estate vantage point, there's a lot of things that would create a lot of opportunity. Okay. Some of them is distress. Okay. Which is a good thing. The market's coming down. People look at as, oh, the market's coming down. It's so bad. We live in a cyclical economy. This is a cyclical economy. So when you have a Fed, right, without getting too much into the weeds, this is how the debt cycle works. Like you go in, you have a bull market, it comes down. And there's an old saying on Wall Street that bulls make money, bears make money, pigs get slaughtered.
Yeah.
Okay. So the market coming down, or maybe, some of the things that Biden talks about could create huge distress opportunity. Buying great real estate at a fraction of intrinsic value that will grow over time and certain things, which is fantastic. There's a lot of arguments to be made. The market kind of needs to come down. Tech stocks are trading at PE multiples that are a little bit scary. Okay. Trump being a real estate guy, if he wins, okay, opportunity zones will stay intact as we see them. Probably you'll have your, long-term capital gain taxes, kind of stay where they, right? So there's different reasons, but because of the pandemic and because of this interesting time, either way the election swings, I still believe they're going to create massive opportunity, but for different reasons.
Yeah. I like that idea of people get so stressed out about what's going on right now. I mean, people say we're more polarized now than we've ever been, but I think I remember every election year for like the past, 15, 20 years, January would hit an election year and the news would totally change.
It's all an accelerant, right? Everything is sensationalized. Everyone is so... Look, there's been an emotional, psychological trauma that this has caused. Is that fair to say?
Yeah, I think it is fair to say. There is trauma just from the news.
There's trauma. I mean, there's actual, look, I'm not a psychologist or, but look, just having my kids at home that they can't go outside as much and hang out with their friends. Right.
Yeah.
Us not social, right? Like there's something there. So even with the vaccine coming, it's still going to take time for people. So when you're in a state of emotional trauma and you have anxiety of whatever it is, no matter what the issue is, to your point of the election or your friend texts you something, you're kind of like already on the edge of your seat. So it's being accelerated, jet fuel's being thrown on it. So yes, it's become polarizing. And I think right now is a very polarizing time, certainly between Trump and Biden and, this division that we're seeing. But I also believe it's an accelerant and it's not truly as much on the merits as people are trying to make it. It's that everybody else is just very, very sensitive for good reason. I mean, this is the first pandemic that we've seen in modern history, although we have had the Spanish flu. This is not the first time this was happened. Spanish flu was exponentially worse. You had people literally coughing up blood and dying in the streets, literally, and not to minimize this. A lot of people have really, really, suffered, which is horrible. And it's been devastating for many different reasons. But long term, this is the greatest country in the world. When you look at the southern states that are business friendly, we're having the best tech innovation. I mean, there is places to make money right now that there has never been before, and people being entrepreneurial more than they've ever been, which is pretty incredible if you think about it.
Yeah, it really is interesting too, because we've talked before, like there's two different like recoveries, there's two different experiences that are happening right now in the world, right? So there's a lot of people that are saying, oh, with my kids working at home and we're working from home now, we're getting so much more family experience, and we're not spending all this time at Costco's anymore on Sundays. And I was talking to a guy that lives in Manhattan yesterday, and he still lives in Manhattan. And, and I said, how's it going? And he said, well, I work at home now. My wife works at home now. Our kids are working from home now. And he's like, and it's really stressful. And we're really struggling because the best parts of the city are all closed. And so we have this tiny little place to live.
What's happening in Manhattan, honestly, is I lived in Manhattan for many, many years, and I love New York City. It is devastating what's going on in Manhattan. Honestly, what's going on in Soho, some of the things there. And I don't get too much into politics or, it's not, look, I think there's great points on both sides. As I mentioned before, there's, some good here, some good there, whatever. But that city right now is devastated.
Yeah.
I mean,
I think
it is.
I just think people need to remember that.
Horrific how bad it is. And New Yorkers, lifelong New Yorkers that I know, have said to me that are in the very senior people in the real estate world, that they don't think it'll ever recover. Think about that. Not to ever recover. That's scary. And when Mayor de Blasio is talking about making Soho the affordable housing, homeless epicenter of New York City,
right. Will cities become the homeless epicenter, right? Will that become the affordable housing because everything is
Can you imagine?
Together?
And by the way,
San Francisco, it's happening.
By the way, it's absolutely happening. And no question. I mean, you look at homelessness, you look at these other issues, and that's another, look. And by the way, homelessness and things have an effect on real estate, whether people think about that or not, right? You think twice if you're taking your kids, your wife out and there's homeless that are in front of your building or, whatever that looks like. And, that's a whole other issue that, we need to figure out a solution for. Because again, a lot of homelessness, what people don't talk about, which is very sad, is the mental health around it again. Like it's not just homelessness. It's, there's a lot of mental health issues that are tied into that need to be addressed. And that's a separate discussion, which is very sad. But if those things aren't taken care of, they destroy cities like they did San Francisco. I mean, San Francisco, honestly, how cool of a city is San Francisco?
Hey, Real Estate Rockstars listeners, I am sorry to interrupt again, but I want to do a quick commercial break. But this commercial break is different. This is stuff that I think you need, and this is me talking to you about some of the stuff that we had. So, recently we had a lot of people reach out to us and say, hey, why don't you do a real estate mastermind? Why don't you do something where a lot of the listeners can get together and do some Zoom calls and ask each other questions and really just try to brainstorm and work together? I mean, there's a million masterminds out there. I don't know if this is something that we really want to do or not, or if we do, if we're going to limit it to maybe 20 or 30 people. We're just trying to figure out if any of you guys are interested. So if you have any interest at all in joining a mastermind with real estate agents around the country that are part of the Real Estate Rockstars network, go to hybendigital.com/mastermind and just join the wait list. It's just it's just an interest list for us to see, is this something we want to be doing? So that's number one. Number two, you go to hybendigital.com/foreclosures. We have a 2-day thing that we just finished recording. Now it's also inside Rebus University. And so you can go to Rebus University and look at it. If you're already a member of Rebus, a lot of you guys are in the, the monthly fee where you get access to everything. So we have a new courses in there. It's 17 hours of content on how to buy foreclosures, on how to find deals, on how to, do title, go to auction, also turn that into clients for your real estate agents, how you can turn somebody that's in default behind on their mortgages into a client. So go, check out that course, especially for, you can buy the course now, but again, most of you guys already subscribed to all that. I just wanted you to know there's another 17 hours of content, great content that I just recorded on there. That all of you guys have access to now at Rebus University. And then finally, we have software that we talk about on and off. It's called Padhawk. And in Padhawk, you can use that to go find leads. So everyone is really, really busy right now. And we're so busy. People are selling and they're saying there isn't enough product on the market, right? So they can't find houses. Well, Padhawk will help you find houses before they're listed. It helps you find owners that should be listing their properties or people that might want to get there. I recorded a quick video. It's like 6 or 7 minutes long for you guys to look at, real estate agent specific, on how you can use the software in order to do it. So let's go to hybendigital.com/leads. Again, there's a video in there. I talk about how you can use the software to do it. Check it out. If it's something that you like, you may want to sign up for it. $99 a month, but it's nationwide, any city out there, and it is a great way to find houses. So right now, people are saying there's lots of buyers, but we can't find enough houses. Well, maybe you can use this software to go find somebody that hasn't listed yet and make them an offer on their house. All right, back to your regularly scheduled program. Thank you for letting me interrupt you with that break.
Like my whole childhood, every time we got to go into California, we wanted to go to San Francisco. We wanted to go to the pier. We wanted to go look at those giant buildings. It has the hills, the water.
I mean, great food. I mean, all these things. And then they didn't deal with the homeless issue the way they should have. And I honestly think ethically it should have been dealt with in a different way. In a better way. Some cities like Houston, as an example, have done a tremendous job with homelessness and dealing with it ethically, and is just great. If you don't know much about how they've dealt with it, you should look it up. It's worth reading, like what their plan was, because it's been so effective. It's unbelievable. But this is going to impact real estate in a major way, where people are like, do I want to live in a shoebox anymore if I'm going to work from home, or do I want to be? But having all that proximity, to your point of your friend in Manhattan, of the kids here around, just the simple distraction, and you love your children, you love your wife, you love your husband, but that separation of us, the kids going to school, them socially interacting, getting that different stimulation, wife, husband going to work, doing something, coming back together, there's a certain routine and a certain synergy and a harmony that creates that it doesn't matter who they are. If you're this close together in a little apartment and you're the best friends in the world, there's going to be friction.
Yeah, it is. It's wild to think about it, and maybe there's an accelerant there too, because that is a whole different topic that has very tough solutions to it. But in California, they've started to buy hotels, from the owners, because their hotels are now struggling, and now it's a homeless center where homeless people get to live, and that's not necessarily a bad solution. But the other part with it, such a tough, complicated thing. But I think COVID has probably thrown some accelerant on that too. Let's talk about. So we're kind of now talking about that exodus, right? The city and the exodus and where there is. So most of the property. So we own a few hundred houses that are about an hour from Austin. Right. So we've got them up in Killeen and south of Austin, and in the places where they're really great right now because they're very
growing
affordable.
Like crazy.
Yeah. You still get a house for $100,000. If you're trading.
And by the way, with huge population growth, huge upside potential, I think it's brilliant markets. And we're super long on Kyle, which is a little bit closer, but the premise is pretty much the same. Right. And we're building them to rent, quite frankly, and hold them, longer term. And that makes all the sense in the world, but people weren't really thinking about that kind of stuff before, right? I mean,
it was like a dirt, people didn't really like the market, right? You could still it's funny, if you sell a house in like Sacramento, California, and you want to move to Austin, Texas, in the heart of Austin, you're not actually going to get that much bigger house for your dollar anymore. The city of Austin, they're the same. But if you go 30 minutes outside of Austin,
isn't that amazing?
It is amazing. Right. It is amazing.
You know what I call that?
What's that?
Opportunity.
Yeah. And it is the opportunities you get close. And now people are realizing, hey, if I still have to pay, if I sell my $2 million California house, I want to live in Austin, I'm going to pay $2 million, but I move 30 miles outside and I get a comparable property size for with a
yard, good school districts, and proximity to one of the coolest cities in America.
Yeah. You still get to go see the stuff.
You know what I call a 30-minute drive?
What's that?
2 phone calls.
Yeah. A couple of phone. Hey, with the Tesla, right? It's also like you can almost be emailing now too. The, self-driving
that still makes me a little bit like, a little bit uncomfortable, but ultimately I'm good with my hands free, with my Bluetooth. 2 phone calls, right?
Yeah, 2 phone calls. Well, the self-driving and all those different technologies and things, and even Uber and things like that have made living 20 minutes outside the city totally tolerable and not a disadvantage anymore.
Because when you're in San Francisco or you're in New York, right? How many people their whole life commute from Long Island to Manhattan, take an hour and 15-minute train back and forth every day?
Yeah.
Millions of people, millions. And so driving 30 minutes, 20 minutes, 42 minutes, 18 minutes, like to have that standard of living, it's unbelievable. I mean, if I was an agent today, okay, I would be going to the Killeens of the world, as you're explaining, and I would be putting my, right? I'd be going to Killeen, Manor. I'd be going to Bastrop. I'd be going to all these little cities like Ancillary, Fredericksburg, Dripping Springs, these cities, little city, quaint, cool little areas that mine aren't there. And I'd be putting my flag in the ground because inevitably, simply from property migration and all the, reasons that you explained, those cities are going to be vibrant and be unbelievably valuable if you look at the 5, the 7, and the 10 year. And I urge everybody in this market, though, as whether they're investors or agents, is to play long ball. Okay. And you have to build those relationships. This is not an overnight market. Okay. In my mind, although Austin houses and things and these markets are selling very quickly in Dallas as well as, Phoenix, and, it's moving. But if you can play long ball here, right, whether as an investor, whether building relationships as an agent and building up your clientele, I think the payoff is so much bigger than it is from traditional long ball, if that makes sense.
Yeah. It's finding those places that are, back in like 2009, 2010, Blackstone and the big investors that really went after the housing, they said, let's find houses that we're just going to get them for less than replacement value. At that time, they just said, hey, we just need them for less than replacement value and it's going to work itself out. And as I see places, 30 minutes
see how much money they made? It was more, they shocked themselves.
They shocked themselves. And that whole reasoning of like, that was long ball. Right. And they actually performed much faster than they thought they would because they created a whole different market.
Isn't that funny?
They bought every house on the market on foreclosure and on the market, and the market went up 40% instantly. So they were brilliant. But the premise at the beginning of, hey, this is a deal, right? This is a deal. It is below replacement value. And when you start to look 30 minutes outside the urban cores. And so for people out there right now, this is a crazy housing market, right? Half of our agents are like, hey, we're having the biggest year ever. And the other half of our agents, their listeners, are really struggling because they can't figure out where those opportunities are. And when you start to look just a little bit outside the urban core, find the places that are affordable with a way to play long ball. I think that is one of the biggest opportunities.
You nailed it. I mean, that is the best advice there's no way it could have been said more elegantly and more succinctly. That's exactly right. But I will say, back to the Edison quote, is this is not a lazy person's market. You're going to have to work twice as hard to get there, to get those results. So you got to hustle. Sorry to break it to everybody, but you see what I'm saying? Like this
absolutely.
Because you're walking through mud. Right. And you're walking through mud. It's like financing rates are really low, but borrowing restrictions are higher. Some people want all cash. I think there's junk to kind of like sort through. Right. But if you do and you put in that work, put in that extra hour, it takes that hustler's mentality. And you're going to see a big dichotomy, as you pointed out, because if you're hustling, this year is a banner year. If you're kind of hustling, you're on the bottom. And usually that wouldn't be the dichotomy. If you're not working as hard, you're still doing pretty good. That's not what this market is. It's either you're in there and a winner and you're taking over, or you're getting eaten alive. I don't see there's much of a middle there.
2010 was the same, right? The guys that had the REO listings and had the short sale listings, or the guys that were buying the foreclosures, it was feast or famine. So you've got these opposite ends of it. We're in this time in our life where it could be the opportunities of our life, maybe second opportunity of my lifetime. Right, that I've seen that is really out there, this
is bigger than 2008, by the way.
Yeah, and people need to push. I think and I hadn't thought about it being bigger, but seeing that out there. Let's talk multifamily for a minute, because that's one of your
that's one of my core competencies.
Yeah, it's your core stuff. So I'm thinking, downtown Austin, when COVID hit, the people, our friends were selling their high-end condos downtown. People said, now you don't have to work downtown anymore. Now you can work from home. Everybody is kind of fire selling everything. People are moving out of apartments because, like the people said in Manhattan,
prices didn't dip as much as they,
You're absolutely right. In March and April, everyone was terrified.
For us in Austin, for prices to dip 8%, that's a fire sale.
Yes, that's true. Right.
And so an occupancy dropped in office 5%.
So what do you think is going to happen with multifamily downtown compared to multifamily there's a ton of
so we own outside the urban core. That our strategy has always been, so we own stuff in Clarksville, and those people that know Austin, that's right outside of downtown, but outside the urban core, but still central Austin has been our thesis mostly. And that stuff, we had record-breaking applicants. We collected over 99% of our rents at the height of COVID. I think we did 7 transactions, 5 of which were multifamily during COVID, closed on them. Okay. Yeah. So, and they have all outperformed everything that we thought that they were going to do. But the fact of the matter is, people are going to come back to the urban core. This is temporary.
Yeah. Our rent collections are higher than they've ever been.
I'm with you. And
our occupancy is higher than it's ever been.
No question. And I think that's a proximity geographic issue based upon the way you're talking about it. Class A obviously took a little bit of a hit, but in the cities that we're talking about that are these top 10 robust Sunbelt level cities, is it really that bad? Multifamily as a whole on average. So New York City at this time last year had about 5,000 vacant apartments. The last thing I read is that they have 35,000 vacant apartments. That's a problem.
That's a problem.
Collecting 92% of your rents is pro forma as vacancy loss, right? I mean, so multifamily has been the flight to security. And I believe it's going to continue to be a flight to security. And people are more cost conscious right now, right? And the amenity that typically was the knock on vintage multifamily of saying, oh, you don't have a gym, you don't have an elevator, whatever, has actually become a plus. Because vintage 2-story or garden style apartments that look, kind of just to put that in perspective, visualizes like what the old motels look like, right? The 2-story walk up or 3-story walk up has inherent social distancing. And people aren't inherent social distancing. So people see that and say, oh, if these are renovated down to the studs and it's nice on the inside and I can pay 30% less than the Class A across the street, I'm actually not using the gym or I'm not going to the pool. So it's actually become a positive.
Yeah. So do you think, like apartments that are, let's say 5 miles out of downtown, right? Those are those 2 stories, just like you're talking about, compared to downtown Austin or downtown, the cities, wherever, as you get out there, do you think prices will go up for apartments that are 5 miles out and down for stuff in the city? Or do you think it's all going to go up?
Look, prices are going to surge on that type of market for a while because of the emotional trauma. Okay.
All right.
People want to be out there for that reason because it gives them a little sense of security. Okay.
Yeah. I like it. Go ahead.
There will always be a certain amount of people that like urban living. Okay. And in markets like Austin or Nashville, as an example, or Raleigh, where your urban core is actually pretty limited, okay? Because Austin has geographic barriers, right? You go too far west, you hit the hill country and you can't build there. I mean, east, you can go the other way, right? That's where the development is headed, but there is always going to be a market of people that want to be in that. So whatever blip that we're seeing on the multifamily urban core side in Sunbelt cities, the major Sunbelt cities that are anchored mostly with tech or have diversified economies, this is a blip. If you're looking at a 5-7 year, 10-year, on the 10-year pro forma, this is literally negligible, what we're talking about.
Yeah. I like that comparison of a core, right? A city core with geographic limitations, meaning it doesn't go on forever, because in San Francisco, it goes on forever. Right?
By the way, that's the issue why Austin has done so well is that, and this is what I love about Austin. So you have a strong liberal core, right? Fair to say, but the perimeter is highly conservative.
Yep.
What that's done is create a beautiful dialogue. So we have beautiful trees. We're doing right. Like there's very strict zoning laws. Great. These are the things that make real estate surge. You have geographical barriers. You have actual supply and demand. We know what can be built. It's like, right. And this is why Manhattan, really went through the roof. It's a freaking island.
Yeah.
It's an island. Like there's only so much can be done. Right. And when you couple that with one of the, more parks than any top 10 city in the country, and with beautiful water, great live music, and good food.
Yeah.
And by the way, in fair weather climate, and no state income taxes, it starts to become pretty obvious why this city is the future effectively.
Yeah. So, you're making a lot of bets right now, and maybe it's not fair to say bets. You have a lot of you're doing the long game in Kyle. You've got the garden style apartments out there. What do you think in the first year of the election, depending on, and maybe it's a different answer for either, what's the biggest opportunity in 2021? If someone was going to say, hey, whether it's as an agent or whether it is as an investor or really trying to create this generation,
I would ask it slightly. I would look at it. I'd have to clarify. It depends on what the goal is, okay? And I'm not copping out of the question, okay? It depends on what we're looking for. Is it a net worth play? What's your timeline, okay? Because if your timeline is to go do something and go to distress and you have 10 years, I'm just using an example. Hospitality is like destroyed right now. So if you could buy a boutique hotel in a great area for a ridiculously low price, but you have 10 years, people are going to come back to that hotel.
Yeah.
Okay. Right. If you're, just starting out, right? And you're trying to buy your first rental property and start to build your portfolio, I'd be exactly where you are. Colleen, little cities outside of great cities, like sprawled metroplex of Phoenix is a great example. I mean, there's so many little pockets around there. Forget about Scottsdale and the more kind of expensive areas, but out there, right? You can do that exactly what you all are doing. You can go buy a single family home, finance the thing for 2%, right?
Yeah,
and
crazy rates.
Rent it and wait, right? So it depends on what part of the market that you're kind of looking at. For us, I think the biggest opportunity is vintage multifamily, 50 to 100 doors, 30-year-old plus product, near the urban core, but outside the urban core, close to new development that we can do Class A finish outs. I mean, I'm talking about gut renovation down to the studs, new electrical, new plumbing, new roofing, effectively creating an annuity, okay, increasing rent, and then putting into agency financing it with Fannie Mae and Freddie Mac and waiting. Because right now, to lock in, this is almost unbelievable. Fannie Mae quoted us 2.4% on a 15-year term with 10 years interest only, non-recourse.
Yeah. And how big was that property?
That property was 15 million. No, 18 million in purchase price.
It is crazy that even.
I mean, that's literally free money on an inflationary basis.
It is, more. It's like they're paying you to take the money if you're considering inflation when the rates are that low. So you're buying 30-year-old apartment complexes, and even though they're rented and they're performing at a cap, you are adding value on all those. Do you move out people model. One building at a time and you gut it, or do you move out everybody?
No, absolutely not. So we go with organic rent growth. So we don't kick people out of buildings. And by the way, it's not only is it not best practices, in my opinion, I don't think it's good business, because why get rid of your current cash flows? So and we want to test our thesis. So if you have, 50 unit building, right? 5 units are organically maturing, or organically expiring. You take those 5 units, right? You renovate them. And first of all, you have to see if your thesis is right. So I put in these countertops, this flooring, this finish out. What if they don't lease? So I'm going to you vacate the whole building and just say, oh, I'm right. This is what the market wants. What if I'm wrong? But if you do it on 5 units and you maintain 95% occupancy, you can pivot on the next ones and put a different countertop in, or less amenity or more, right? And it's all about mitigating risk. So in this environment, the most important thing is how you run sensitivity analyses. And that's basically a fancy way of saying, if stuff goes wrong, what are you going to do? And you need to be more stringent on budget, more, cost effective, running your expenses. You have to watch the pennies in this market, because if you don't, small leaks sink big ships.
Yeah. I think that is great advice on a strategy out there that even people, kind of on their second, or people that have 5, 6, a lot of people talk about they're in single family, they want to get into multifamily, and how do you do it? Because there's so many people that are presenting these value add pro formas. They're like, hey, we're going to buy this, we're going to do this much value add, and you're saying, hey, it's just your thing in like the long game, right? Like there's no rush. Let's do it as we can, figure out the best thing. After we do 20 or 30 units, we'll figure it out.
If you're an investor, you should take that word out of your lexicon, throw it in the garbage, and call yourself a risk manager.
Yeah.
That's the difference between a gambler and an investor, is risk management. My job is to look at every scenario statistically that I can look at, or stress testing, as they say, the fancy way to say it, right? My pro forma, and manage risk, especially if you have third-party capital, especially if you have other people's money, even more so, because then at that point you're responsible. Whether you're a fiduciary, but you have to, manage those things and take as little risk as possible to make whatever money you're going to make. So, we can make this much money, but how much risk are you taking? That's always we call it risk-adjusted returns, or not we, but that, industry jargon, right? Risk-adjusted returns. If I can take this much risk to make this much money, that's the asymmetrical risk that I'm looking for. And that can be applied to a single family home. If you're buying for $100,000, don't go gut the whole thing, change the roof, do all this stuff, and go spend every dollar on the whatever. Hey, try to get a tenant for 6 months or a year. Get a little money coming in the bank. Ask them what they want. Change your cabinets. See if that gets you an extra $50, right? And taking it slow and playing that long ball game, back to that thing, is what I believe will ultimately achieve greater results over time. We live in this instant gratification, quick fix dopamine hit, environment that has to happen now. But that's not how investing is done in the long term in a risk mitigated environment, in my opinion.
Yeah, I like that idea. Throw out the word investor. You're now a risk manager, and the more risk you manage, the more you get paid for it, right? Like the more risk that someone is able to manage, the higher they get paid for it. So Ari, your video went out, but I think you're still there. Can I still hear you?
My video go out?
Yeah. And you're back. So we're just talking about Zoom, and all those different technologies out there. That has been one of the coolest things, I think, for, technology innovation is how many people do know how to get on now.
Isn't that cool?
And click in and see that. I'll do 5 podcast interviews today. I'll be able to, and as I hit my journey back, we're jumping back in the RV next week, heading back to Austin. I can't wait to hit kind of some of our best weather of the year.
I'll tell you what, when you get back to Austin, shoot me an email. Let's grab dinner. Let's get together. Come by the office. I'll show you some of the stuff that we're doing. I'd love to see what the stuff you guys are doing as well. We love the show. We love what you guys are doing. So keep it up. And we're big fans of what you're doing.
That is awesome. Ari Rastegar, thank you for coming on here today. If our listeners want more information, they want to hear more of what you're saying, is there anywhere they can go find some other stuff that you're doing?
I mean, honestly, just Googling my name, if you just type in Ari Rastegar into Google or go Rastegar Property into Google, there's a bunch of stuff out there. We've been in Forbes and the Journal. It's very public what we've done, and what we do and what we stand for and what we believe in. And so it's pretty easy to look us up and see what we do. And, we love to come back if it makes sense, and we love to to listen in and see more of what you guys are doing.
Yeah, I think for sure in a few months we'll have to get you back on as you and I are then going to be talking about our.
See what happens. Let's see if we're right.
Let's see what happens. Let's see what's going on. Let's see who gets elected and what's next. Ari, thanks for joining me today, and Real Estate Rockstars, thank you for listening.
Much love to you guys.
Rockstar Nation, thank you for listening to Real Estate Rockstars. Listen, I need a favor. If you find this free content helpful, if you find our downloadable items from each guest helpful, please, I need you to pull out your pointing finger. Yes, the one finger that points at people, and hit subscribe. Yes, subscribe. The more subscribers we get, the better we look in the ratings, and the easier it is to get guests like Robert Kiyosaki, Barbara Corcoran, all the players that are on $1 million listing in the different cities. All that stuff makes it easier the more subscribers we get. So please subscribe. And listen, there's a lot of places you can leave comments. There's a lot of places you can like. We're on Facebook. We have an Instagram page. Instagram page is I am Pat Hyben. The Facebook is Real Estate Rockstars Radio. Feel free to leave us comments there. The most popular form of commenting seems to happen on YouTube. Yes, for whatever reason, it's a very open environment. So just go to YouTube and go to Real Estate Rockstars Radio. Leave us comments there. Some of them we will read on the show. We love your feedback. So thanks, guys, and I hope you are having a great day. Oh, and also, listen, if you're going to subscribe and you haven't already left a review on iTunes, please do that too. Have a great day, and thanks so much, Rockstar Nation. I really appreciate you.